Good afternoon and welcome to Market Closing on our collab show between Business Today and India Today Television. I'm Sakshi Batra. This is 3 p.m. show and we are here to get you all the market closing action. First up, let's look at what's hot in the corporate as well as the financial space. America's closest ally rejects Donald Trump's dead economy claim for India. British Prime Minister Keir Starmer hails India's remarkable growth story, says he wants to be partners in this journey. Prime Minister Modi says the trade deal with UK will give the world economic stability in these uncertain times. Pharma stocks gain after reports suggest that Trump may shelve tariffs on generics. Wall Street Journal says decision follows internal debate and could change. Nifty Pharma Index back home is up by 1%. Aurobindo Pharma, Lupin, Piramal all gaining anywhere between 2 to 3%, easing the pressure on firms supplying nearly half of US generics. Markets trading firm ahead of the second quarterly earnings. Sensex is up over 250 points, hovering near the 82,000 mark, while the Nifty has also gained a strong move and now is hovering around 25,180. Broader markets also show strength with gains in mid-caps as well as the small-cap indices. TCS, Tata Consultancy Services, trades in the green right ahead of its Q2 earnings today. Street expects no major surprises in this quarter. Nifty IT index is up by about 1%, with HCL Tech, Persistent and Oracle Financial Services gaining up to 2% in trade. LG Electronics India IPO has been subscribed 33 times so far on the final day. Grey market premium is at 27%. Strong investor response has been seen. The price band is anywhere between 1,080 to 1,100 rupees, 40 rupees. And also the company aims to raise 11,607 crores through an entire offer for sale issue. Let's straight away take a look at how the stock markets are trading in the last 25 minutes of trade. It's a green screen, viewers. You can see the Nifty that's inched to the high point of the day, half odd percent higher, right amid all that choppiness that we've been seeing right from the morning trade. All the sectors are now pulling up higher. Look at the metals, look at the IT index, look at the pharma. These are the top three sectoral movers at this point. Even the banks are participating, so are the mid and the small caps. All the sectors are into the green at this point in time. When we look at the top movers on the Nifty, you have the metal counters like JSW Steel, Tata Steel and even HCL Technologies from the IT pack up by about 2.5% odd. SBI Life, Ultratech, Cement and Pharma. These are the other top movers in trade at this point. Any top laggards? Well, you have some banking names like Axis Bank that's down by 1%. Tata Consumer Products and Titan are also reeling under some pressure at this stage in time. We're also looking at Maruti and Bharti Airtel among these other top drags in trade right now. But let's quickly welcome our guest on board, Mr. G Chokkalingam, the founder and MD of Equinomics Research, who's joining in on the program with us. Warm welcome. Good afternoon to you, Mr. Chokkalingam. Help us understand with your fresh view in the markets, how are you assessing this constant attempt by the bulls to come back above 25,000, 25,100, 200 or sorts? Do you think there is renewed optimism in the markets and by Diwali, this festive season, we could yet again make an attempt to go back to our erstwhile all-time highs on the markets too?
There would be a periodic upturn, but I doubt whether that would be sustained. I have been perennially optimistic and bullish on this market for more than 10 years in a row, except last September. But once again, I am a little nervous, not because of US tariff war. I completely agree with the finance minister statement that the domestic story is so strong, we can overcome. Yes, it will give a pain, no doubt at all, for the economy and market, but we can overcome. My concern is more on the liquidity front. The promoters have sold the shares in the last 1 year. The FIs have sold the shares in more than 3 lakh crore worth in the last 2-3 years. And the IPOs have checked out, close to 1 lakh crore in the current calendar year. So the liquidity is getting, drained out of the secondary market. And that is going to cause a lot of volatility with the downward bias till end of the current calendar year, till December. So another 3 months, I feel we will have a lot of volatility with the downturn. Yes, periodic there will be upturn, and that is not likely to be sustained. So only when the IPO boom bust out and it takes a modest position in the sense, not every issue is getting was subscribed and not every issue is
Yes.
getting phenomenal was subscription. Unless such thing happens, this is going to have volatility with the downward bias. So therefore, the valuation of individual stock is the most important at this juncture.
Valuation is the most important point to keep in mind. But pharma stocks are back in action, and let's keep an eye out on what is really moving the healthcare sector higher. Pharma stocks on a strong footing today. This is after reports are suggesting that Donald Trump administration is considering shelving off tariffs on generic drugs. Let's just find out how much relief could this bring to the Indian pharma companies. I'm now joined by my colleague Neetu Chandra Sharma for more on this. Neetu, we do know that the last time around there was news on tariffs on the pharma space in India, all the exporters of branded and patented drugs. There was a sharp knee-jerk reaction on the stocks back home. Today, they are seeing all across the board 1 to 5% odd kind of a move on the higher side on the pharma-related stocks. Is this a big news that's coming in as a big relief for the Indian pharma companies?
Yeah, Sakshi, so there is now more clarity on this issue. So now the Trump administration's decision to spare generic drugs from import tariffs, it's a huge relief for both American patients as well as the Indian pharmaceutical industry, which supplies nearly 40% of the generics to the US market. So now if had tariffs been imposed, it could have disrupted supplies and raised drug prices and hit India's $25 billion export market hard. So this exemption essentially protects India's role as a pharmacy of the world while ensuring affordability in the US. So however, if you look at this move, this also shows that the US wants to reduce the long-term dependence on foreign manufacturing for critical drugs. Now, I've spoken to many analysts in the sector. What they have said that after this move, Indian pharma will need to invest in quality, innovation, and partnerships to stay ahead in the US market after this move. Yeah, back to you, Sakshi.
Thanks a lot, Neetu, for all that update. Coming back to Mr. Chokkalingam, how do you see, Mr. Chokkalingam, this move for the Indian pharma companies? Now, we do know, even at the time of the announcement of a 100% tariff on some of the pharma exports that Mr. Donald Trump had announced, especially for the branded and the patented drugs, we were trying to assess how much of an impact could there be. There were names like Sun Pharma could be impacted because they have a branded formulations portfolio that exports to the US as well. But a large part of Indian pharma companies actually export generics. And the big question was that after branded and after patented drugs, will generics also come under the fold of tariffs? Today, that clarification has come in. And the Trump administration is saying that generics will stay out of it. Big coverage and big news for the Indian pharma space. How would you look at it?
I would still have a little cautious approach because Mr. Trump, very clear in his mind that even on the domestic front, he has already warned US pharma companies on the high profit margin. So definitely it is not going to be aggressive 50% or 100% for Indian pharmaceutical exports. I'm pretty confident on that. Same way, it is not going to be, zero or in single digit duty. It is going to be somewhere in between, the duty, and also there will be a lot of pressure on the price front, not only for American companies, even on exporting countries. So therefore, I would still advise a little cautious approach, particularly on exporters, and therefore I would suggest focus more on domestic demand-driven domestic formulators.
Fair point. Fair point. So you are saying that, it's better at this point in time to still stay cautious on the export-oriented sectors, focus more on the domestic themes. I'll talk about one more export-oriented sector, and that's IT. That has been in momentum over the last couple of sessions. Today is when the focus starts on the Q2 earnings. TCS, Tata Elxsi start off and kickstart this Q2 earnings season for the IT industry at large as well. As far as TCS is concerned, remember, viewers, this is the largest Indian software exporter company that we are talking about, the largest listed company with market capitalization in the Indian stock markets, and therefore a result coming in from TCS will also have an impact on the entire sector as well this time around, because reasons that the TCS results are coinciding with Mr. Ratan Tata's death anniversary. The customary press conference has been cancelled, but what we are still hoping to see is the commentary, especially on the client spends, on the economic growth outlook and the deal pipeline as well, also the wage structure going forward from here. Mr. Chokkalingam, to you, on TCS, what's your big expectation for the Q2 earnings? And on the overall IT sector, what's your approach?
It is very easy to make a judgment on IT sector for any analyst, I believe, firmly, because things are very clear. The last 2-3 years, they have been growing in a poor single digit in dollar revenue exports. And there is no optimism on that. That is not going to change at all. But added to that, you have problem of H-1B visa issue, which is going to be marginally negative. And then there is also fear of any possible tax on IT service exports. And therefore, the expectation is that the single-digit growth syndrome, which we are seeing in terms of dollar revenue exports, is going to continue in the short to medium term. So even the rupee depreciation in the last 3-5 years has not helped the Indian IT companies to improve the margin substantially. It seems the customers have become very smart. They are also part of the beneficiary of this falling rupee over the last 3-4 years. So I would say that at best it would be defensive, or it can make a trading profit. But the wealth creation story is over, at least for next 1 to 2 years. That's my focus. One should focus more on small, mid-sized quality companies within the IT sector, because once again, I expect merger and acquisition to get a momentum like what we saw in 14 to 19.
Okay, let's actually talk about the primary market space, Mr. Chokkalingam. You began by talking about it and referring to that as well. This is one space where average retail investors, those who have just started investing in the stock markets, begin to start trying their luck in the IPO space, because historically it was always believed that IPOs give you an early entry into a stock, and therefore you have a lot of opportunity to create wealth for yourself because you are an early entrant. Come now the time when large IPOs of the likes of Tata Capital IPO, LG, all of them are upwards of 10,000 odd crore rupees are actually coming in, with a major chunk also of an offer for sale. So the companies themselves are not raising the funds as such, but these belong to big conglomerates, larger than life companies that have been existing in the Indian domestic space. People have been using their products as well. How would you really look at such IPO opportunities? LG's got subscribed 33 times already. That actually goes on to show the kind of interest that retail investors also have in such companies. How would you look at the IPO space right now? Would you pick anyone between Tata, although that's done and dusted? Today the allotment will come in, and LG is the last day today.
Yeah, couple of insights which I learned in the last 32 years I can share. Probably it can be useful to the retail investors. Starting from Arshad Mehta boom time, the primary market boom was there. You are right. The early entrant used to make a lot of money through primary market, but that was till the time we had a control on pricing. But now we have a freedom to price to an enormous extent. So a lot of stocks are debuting in the secondary market through IPO already at a rich valuation. So therefore, the research capability becomes very important in identifying which is a great opportunity at the early entry. So not every stock will give you phenomenal return. That is one point. And second, in a bull market, in the primary market, of course, everybody who applies makes money on listing. And that has been happening consistently from 93. But at the primary market, bull market peaks out at some point in time because of the liquidity constraint. Now I think this is the time for being extremely cautious. Already some signs are visible. Some stocks are down even 30-35% from the offer price. Now this time has come for being very cautious in terms of picking up the primary issues in terms of valuation. Because as I already listed out, the liquidity has been drained out. So now it is only the fundamentally sound companies will make money on listing. Many would, will have a lot of risk for the investors.
Okay, fair point. We'll come back to the markets discussion, but remember, viewers, it's an important day because Prime Minister Narendra Modi has already hailed the growing trade partnership with the United Kingdom as the perfect foil to the global economic uncertainties. The two countries today have signed 12 deals in areas of tech and innovation, education, trade and investment, even climate, health and research as well. In a joint statement after a bilateral summit at the Raj Bhavan in Mumbai, the British Prime Minister has hailed India's economic growth as remarkable and has also said the UK has wanted to partner India in the journey ahead as well. Mr. Chokkalingam, how are you looking at all of this as well when it comes to the trade deals that are taking place with the UK?
In fact, we have enumerated all the free trade, bilateral trade agreement with every country. This is a very phenomenal achievement because USA is the biggest trading partner if you had a service sector, and that service sector also some disruption started happening. So therefore, signing free trade agreement through bilateral talk is the most important. We already achieved, milestone in terms of agreement with, countries like Japan, UAE, now with the UK. And this is not going to mitigate fully the risk coming from the US trade war, but certainly it is going to mitigate to a large extent the risk coming from the US. So this is going to be big positive for the market in the medium to long term.
Absolutely. Let's actually go on to listen to the Prime Ministers of both the nations as to what they had to really say on this trade partnership.
मौजूदा वैश्विक अस्थिरता के दौर में भारत और यूके के बीच ये बढ़ती हुई साझेदारी ग्लोबल स्टेबिलिटी और आर्थिक प्रगति का एक महत्वपूर्ण आधार बनी रही है। भारत का डायनेमिज्म और यूके की एक्सपर्टाइज मिलकर एक यूनिक सिनर्जी बनाती है। हमारी साझेदारी ट्रस्टवर्दी है, टैलेंट और टेक्नोलॉजी ड्रिवन है।
India's growth story is remarkable. I want to congratulate the Prime Minister on his leadership, aiming to be the world's third largest economy by 2028. And your vision of Viksit Bharat is to completely developed country by 2047. And everything I've seen since I've been here is absolute proof to me that you're on track to succeed in that. So we want to be partners on that journey. When we leave India later on tonight, I expect that we will have secured major new investments, creating thousands of high-skilled jobs in the sectors of the future for both of our nations. The UK and India stand side by side as global leaders in tech and innovation. The demand for the best quality higher education is very high. So I'm really pleased that we're announcing today that more British universities will be setting up campuses right here in India, making Britain India's leading international provider of higher education and delivering on our vision 2035 that we set out in July.
All right, so the big trade partnership that's underway between India and the UK. Moving on to talking about the tech space and what's really buzzing there. Paytm is revolutionizing the payment world through AI now. The company has unveiled the AI Soundbox designed to transform small businesses and digital payments across the country. In an exclusive conversation with Business Today Television's Astha Chopra, Vijay Shekhar Sharma, the CEO of Paytm, has now shared why the company is betting big on AI. Let's listen in.
Can you tell us about what changed, why the user will love this product and it's a game changer in the ecosystem?
Well, up till now, Paytm has been known as acquiring payment, soundbox, QR codes, but in the AI generation, I call it intelligence generation. We've created a device that will become the chief operating officer, chief finance officer, or everything that the shopkeeper needs. So we launched Paytm AI Soundbox today, and this leapfrogs it to an AI device from a payment device.
Well, just before I let you go, Vijay, in 2026, we are talking about you have been a game changer all throughout the years, whether it's 23, 24, 25, we have witnessed this. What can we expect more from you?
Everything AI. the kind of products that we will build haven't been able to be built before because the power of AI models is exemplary. You saw is that we launched consumer product where we gave this playback product which cannot be customized music based on customers' portfolio. We talked about Soundbox, which is like giving millions of merchants, hundreds of million merchants, AI device on the counter. That is the mission that we want to take.
All this comes with a security as well. Is it secure enough to people to trust everything?
That's the best part about it, that India's payments are not just inclusive, they are most secure and safe also.
All right. So the parent company of Paytm, 197 Communication, is already reacting to this big AI move by Paytm. The stock is already up by about 3% right now. Let's go back to Mr. Chokkalingam and try and find out what does this really mean for Paytm as a company. Right now, 2% high. You can actually look at the day's high move that we are seeing at this point in time. 1250 is the current level at which Paytm is trading at. Now, when we look at the last 1 month, it's been largely flat. But let's see whether this move can usher in a fresh trajectory of growth for the stock as well as for the company too. In the last 3 months, we've actually seen the stock move up by about 30-odd%. In the recent past, we've actually seen Paytm undergo a lot of volatility because a lot of issues that had erupted as well. How would you look at Paytm right now as it goes into newer chartered territories of AI and completely wants to transform from just being a payment-related company to an AI company at large? What would that mean for the shareholders and prospective investors, Mr. Chokkalingam?
Yeah, the company has come a long way. In the last few quarters, it has improved, the margin, and the market also rewarded. But still, valuations are stretched. So these are good initiatives, no doubt. But from investors' perspective, I would say that at least wait for September, December results and see, whether there is any further improvement. Because in terms of EBITDA, it's quite stretched in valuation. So one can at best hold the stock.
Okay, how about the entire tech universe at this point in time? We have so many new age technology companies that are listed on the exchanges. We have Zomato by the name of Eternal, its parent company. We have Swiggy. We also have Nykaa from the beauty tech space. We have PB Fintech from the insurance tech space. So many of these new age businesses that have now got into the households as household names and have now changed the way we usually function on an everyday basis. This entire space seems to be buzzing. Look at what's happening with Swiggy today. 3.5% higher in trade. So a lot of buzz in the new age tech, quick commerce space too. How would you look at some of the other players? Any favorites there?
One has to admit the fact that it's a massive structural change happening in the country. Some of them will, already became a part of benchmark index. Few more would join. But same time, the risk also would increase because do not forget the fact that India is a service economy. There are a lot of young entrepreneurs waiting to jump into all the kind of business which we are talking about. So only few of them would really make it very big. So I would say that if we are paying 100 PE, see that profit grows at least by 25%. Traditionally, the profit should grow by 100%. I am willing to compromise. At least ensure that profit grows by 25% if you are paying 100 PE. If you are paying 40 PE, at least profit should grow at 10%. To that extent, one can make compromise and then look at the stocks and invest. Otherwise, the risk could be enormous.
What we'll do is actually look at how the markets are trading in the last 2 minutes of... Okay, I think we can go across to UK Prime Minister who's speaking right now.
Democracies. So, in the 3 months since we actually signed that back in Chequers, we've seen a £6 billion boost in trade and investment. That's on top of the increased numbers over the last year already, and the great ambition we have to go further, which I believe we can do as we go on down this road. It includes Rolls-Royce, of course, agreeing huge new contracts with major Indian airlines. Today we're announcing new investments from Revolut and Tide. And exactly these sort of connections we're trying to build. And in the past, certainly on the UK side, I feel strongly that governments have negotiated trade deals and then basically left them on the table and walked away and said, well, it's now over to you. I think we've got to do things differently, and governments have to provide more follow-through, support, and make sure that the connections are in the right place. Is there anything a government can do to get on the pitch and help with the work that follows from that? And so instead of sort of I don't know, building a stadium and then saying to the players, well, over to you, get on with it. We want to be on the pitch with you as well, or at least on the side, like a sort of well-engaged manager or coach. I would rather be on the pitch personally, but you know what I mean. We've got to follow this through. So taking a different approach, we want to be hands-on and make sure that this deal, the potential of this deal, really does deliver. And that's why this forum is really important, because I think this is the opportunity that we have by making sure this forum operates properly, to have both Prime Ministers here engaging with you, getting the feedback, and that requires us then to take that away in an active way and say, well, what more do we need to do then where there's any issues that can be disentangled. So we want to provide a direct channel for you. Tell us what we need to do to go further and faster to deliver the most from this deal. And I say further and faster, all good ideas still get bogged down in the frustration of delay. And we have to unpick that delay. The world moves much more quickly now than it did in the past, and governments need to keep up with that pace. So you need to tell us what we need to do, how things are working, where there are still barriers that need to be taken down, and what more we can do to capitalise on the opportunities. So the message from me is we're here to help. I've got key ministers with me, in Peter and Douglas here, Secretary of State for Business and for Scotland, and before Scotland, Douglas was responsible for trade, and therefore you've got experienced ministers, and they're here as evidence of how important we're taking this as a government. So we want to support you to maximise the potential in relation to this FTA. But once again, let me say thank you for being here. Today is just the start, if you like. Now the task is to follow through together, and we're committed to doing that because we know the enormous benefits that are there for your businesses, for our countries, and for working people across both of our nations. So thank you all very much. It is now my pleasure to hand over to Prime Minister Modi with our sincere thanks for the very warm welcome that's been extended to me, to the entire delegation, and through me and the delegation to the entire country. Thank you for that, and thank you for helping making this trip such a success. Thank you.
Your Excellency,